We got OP coin here, optimism coin, but not very optimistic about this. So below this daily moving average, so therefore it is bearish. And I believe it's at an area of resistance right here. Well, maybe not. Hold on, let's see. Move this down a little bit. Yeah, a little bit. Yeah. So resistance, 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 broke, and now is retesting it. So good potential to head lower, but we have had two big bull days into this zone. But today seems to be a little bit indecisive, but I mean, it's Sunday, so you really got to take that with a grain of salt. It's not really a normal day. And just first look, I see this here. So it is rejecting this 38.2 zone, so that tells me that this bearish trend, you know, this segment of price here is very strong. The trend is strong downwards. So, well, let's check out the 4-hour moving average. Oh yeah, this is textbook. Okay. We'll go back to that. So yeah, right at this moving average and at this zone, it's selling off. This is one of my favorite trades to take. Obviously, I think I kind of missed it, but we'll break it down and just see, just to give you guys an idea of what I look for when I'm trading. So anytime price can hit a zone like this, so there's a lot of confluence. So like we said, there's the 38.2 telling us that the trend is strong. You can see rejecting this area, and then it's rejecting this zone of liquidity that we marked out for previous price structure, you know, rejection, rejection, broke, that type of thing. And now this 4-hour moving average, so that's huge. You can see it's actually legitimately rejecting this 4-hour moving average once, 2, 3 times. This is a big candle here, right here. I'll delete this for a sec. So this candle's huge. You know, price action is everything. So, but a couple things here. You can see we do have bull structure, higher highs, higher lows. This, you know, pulled straight up pretty much. And then you can we can check, because there's an area of liquidity right here. See, rejected, rejected, rejected other direction, rejected, broke, and then held above this line. So this might be support, and so if let's just pretend, we'll play devil's advocate, and we'll say that this is, we'll go from here, we'll say that this is bullish now, and it's going to cross over this moving average. It's going to keep making higher highs. This is your area, so 50%, 618, my favorite area to enter is right here. So that also lines up with this previous zone of liquidity, so we can delete that, give us a bigger zone here to work with, and you know, it's bang on. So you can see the support right at this 50% area. So there's a chance that price comes down and touches this area and gets bought up and goes higher. But in the meantime, we have to respect the trends. So again, below the daily moving average, so bearish, and it has recently created a lower low, and it is respecting that 38.2 zone from this segment here, from here to here, remember? So we have to favor the downside more, but there is upside potential looking at, you know, this lower time frame here and this recent bull momentum, you know, and you can see that, like, it's, you know, it's hit this area 1, 2, 3 times, big bullish candle, bullish engulfing candle out of the zone. So I mean, there is a chance that it is bullish, but I'm going to favor the downside. I'm gonna trade based on what I see, not what I think. And you know, I'm going to say that this is going to head a little bit lower and it's going to retest this zone, and that's my highest probability trade. So even if this is bullish, even if this is going to go to the moon, it's going to go to $10, let's say, it probably has to go down to this zone first, right? It has to find buyers. It's losing buyers right here in this area, which makes sense at this moving average and everything else. So it needs to find buyers. It's going to gravitate towards where buyers are, and they're in this area here. So price will most likely come down to this area before it goes above this area. So I'm more inclined to wait for it to come down to this area and buy it no matter what. Or potentially sell it from where it is right now. So if we look at this, we can target this 50% zone. You can see it has made a recent, I'll get rid of this one here, so these don't get confusing, but I'll delete this too. So you can see a lower high and a lower low here on this 1 hour structure. So now you're looking at a retracement of this little segment here. You can see it's hitting the 618 and rejecting. Actually, you can't make this up, but like it's holding perfectly at 618. So I think that kind of tells me that there's, like this is probably the perfect time to enter. The only thing is that your price action is incorrect. So like right now we're dealing with a big 4 hour bull candle and there's an hour and a half left before it closes. But you do want to wait for bear structure to set up. So this 30-minute engulfing bearish candle is probably a pretty good entry. I'm not going to take this trade or anything, but because I haven't spent enough time looking at it, this is just real quick. But this would kind of be your entry. You would keep your, I don't think the risk to reward's actually in this. You got to keep a couple things. You got to keep your stop above these two recent highs, because price could do a liquidity grab. It could go up to hit the top of this area here before it sells off, right? You can kind of just exactly what this one did. So like it probably won't happen again because this literally was the liquidity grab candle, but I mean it could. So that's kind of your entry there, and then you would target I'd say probably the top of this zone, because if this is bullish, it might not go deeper into the zone. It might get stuck right here at the top of this zone. So based on this, your risk to reward's not really there. It's less than 2, so I would never take that personally. But I just want to see as far as like next week, because that's really what we're looking at this for. So as far as next week goes, I mean this moves about, this says 25 cents a week, but I don't think that's accurate, because like last week was only 12 and a half, 21 the week before, 19. Yeah, so maybe like 15 to 20 cents. So if let's say next week is a sell-off week, I mean that's just only 4, so only 4 cents. So it does have a lot more to go. So odds are what could happen is price comes down from here to here, so that's only like 4 cents. It's not much. And then you get your big buy here, so to take out this zone, because let's just say that this price holds above this area, right? It finds this liquidity. Once it hits this price, it gets bought up, and we are looking for some bull, some at least temporary bull structure and bull movement. So then you kind of look at these zones here, but that's only if, because like you technically are counter trend trading, that's only if it finds support in this zone here. If it breaks this zone, then we're still definitely looking to the downside. And if that's the case, I mean there's an area here that we'd be looking at. I'd still probably favor the downside no matter what. The only way I would look at a buy is if it comes to this zone and holds, but even then I don't really like that. I would probably just prefer the downside, to be honest. Keeping your stop above these wicks here, above this moving average, and probably just targeting. I mean this is where you kind of it gets tough, because you have good bull momentum into this zone, but this is an area of resistance, that 38.2, all that you have to factor. I mean today it is Sunday, but this is a pretty indecisive candle here. It's almost like a doji candle, but granted there's still 9 hours left before it closes. But we know this moves about, like this is saying 25 cents, but on average it really is about 15-20 cents. So you could target, as far as next week goes, which next week starts in 9 hours from now, but you could target like way down here, which would still be reasonable. Like that's only 18 cents. We know this does about 15 to 20 a week right now, so this would be your weekly setup. And you would go to, let's see, where's my end of the week? Sunday, right there. So this would be your setup for, sorry, I'm choking here. This would be your setup for the week here. And yeah, I would probably just wait. I mean, the only thing, like as long as price takes out this area here, then you're good to go. But if it gets stuck at this area and it starts, you get some good bull momentum out of this area, once price re-hits this area, then you get out of the trade. But I would still say your short position is your best bet. it's the best risk to reward. It's with the trend. It's below the daily moving average. The 4-hour moving average is actually respecting it and rejecting it perfectly. Lower lows, lower highs. So yeah, this really is my perfect setup here to the downside. I think that like I said, no matter what price, realistically, even if it is going to go higher, it's got to go to this area first. So like worst case scenario, and this is how I base my trades, is like even worst case scenario, I'm completely wrong. Still, let's say I get it now and price hits this area and gets bought up. I still double my money. So like worst case scenario, I double my money. Best case scenario, I make, well, this is 8 times, which is pretty crazy. Be a pretty good trade, but this is all within reason. Like this is a really good trade. It's based on structure and range, price action, everything tells me this is a really good trade. The only thing is that you got this recent bull structure, right? Higher highs, higher lows. This price segment looks vastly different than all of this. So that's the only thing really catching me off. But again, like I said, if you got in and you targeted the bottom, which this is the weekly range, it's only 18 cents, and weekly range is between 15 and 20. So like that's super reasonable. You have the 4-hour moving average on your side. You have this protecting zone on your side. You have the 38.2 retracement factor on your side. So you can see it's respecting it like perfect. So you got all those factors to favor you. So I would take this downside trade all day. I think it's worth it. You just got to wait for the right price action. This 30-minute candle is good. I would just dial it in on the lower time frames and just really look. You can wait, because, and that's the good thing about these kinds of trades, when you have so many things favoring you and so many confluences, like right now I'm looking at over an 8 risk to reward. I don't need an 8 risk to reward on for my trade. So what I can do is I can just wait. I can wait till I get, so I'll lose my risk to reward a little bit. Let's say it goes down to a 6, no problem. And I can gain some confirmation. And what I mean by that is, wait for price to cross over this 15-minute moving average. Wait for price to start creating lower lows, lower highs on this, on this 5-minute time frame. Something like this. Like you can wait for this price action, and I would, and then you're good to go. Because like right now, price is above this 5-minute moving average. So like we can wait for price to cross over this 5-minute moving average and create a couple lower lows, lower highs, all below this 5-minute moving average. And then if that drops my risk to reward to like, let's say it comes down to here and it's only like a 4, 4, you can actually see there's an area here, a perfect area here. So if price, if I have to enter below this area, like that's no problem. So you're still looking at a 4 risk to reward. So you got less risk to reward, but a much higher probability and more confirmation. So at that point, like if price breaks below this area and holds, I mean, it's below the 50-minute moving average, it's below the 5-minute moving average. You have your lower lows, your lower highs. You know that price came up to this area, respected, and sold off. So you just have a lot more confluence, and so that's what I would probably wait for. And actually, I'm going to set an alert here because I might actually take this. Don't take crypto trades often, but when they set up nice, you kind of have to. So, that's what I'm waiting for, and that's what I see playing out. And then like I said, I mean, or if worst case scenario, price hits the bottom of this area, and gets bought up, no problem. Then we exit our trade. Like it's but we have to shoot for a high risk to reward, or well at least a like a reasonable risk to reward, one that makes sense. And this one is within range for the week, so that's reasonable. But yeah, if, worst case, let's say it does break this zone and it's heading lower, but then it hits this major zone here and gets bought up to end the week, then you just close your trade and you've doubled your money. It's not the end of the world. Like that's still a good scenario. So there's a lot of scenarios here built into this trade setup, and they're all relatively good. So I like that a lot. That's my take on optimism, OP coin. Let me know what you guys think in the comments, and I'll see you in the next one.